Treasury yields stabilizing from earlier losses after Fed Chair Powell said he still expects rate cuts this year, though noting more progress is needed on inflation because before those moves can begin. Joining us now is Yelena Shulyatyeva, BNP Paribas senior U.S. economist. Yelena, it's always great to see you. Thanks so much for being here. So I think the markets are
Such a pleasure.
Thanks. The markets are kind of trying to figure out whether to take Powell at his word at this point, right? We have seen the market pricing in a lower chance than previously that the Fed would begin in June. You got Raphael Bostic saying maybe it'll just be one cut this year and not until the fourth quarter. How do you put all of that together?
So Powell just basically left it up to the data to decide. And we've been getting some strong data recently. So think about not just, the ISM manufacturing index a couple of days ago, but last Friday, we received quite strong data on consumer spending. So everybody was focused on inflation readings, but the PCE report we received last Friday also showed a significant rebound in consumer spending for services in the months of February. So that report actually confirmed that spending in January was weighed on by weather-related factors, and the consumer strength is still present. So putting it all together, consumer spending, ISM manufacturing index going above 50 break-even level, and even today, the ISM services data was relatively strong. The decline was driven by supplier deliveries, which is actually a positive thing, suggesting that supply chains are healing. So all of this positive data are telling us that the economy is doing just fine, despite the fact that rates are so relatively high, and that is continuing. But something very interesting, Powell reiterated at least 5 times today, was supply side factors. So he's talking about supply side factors that are pushing economic growth to much higher than we think where the potential growth is. But that does not preclude inflation from subsiding. And he reiterated that again and again today in today's speech. So our projection is for 3 cuts this year in line with the median dot at the latest FOMC meeting starting in June.
So does that mean, Yelena, you obviously, do you agree with Powell then when he said today, talking about inflation, he sees this kind of bumpy road back down to his target of 2%, even with, Yelena, what we're seeing in commodities right now?
Sure. Commodities is a risk factor here, I would say. So that could percolate into core inflation. So whether it is core goods or even core services, which include like hotel prices, travel, airfares, and such. So, but it will probably take a little bit of time, and these are not. These things are very easily identifiable. So commodity prices can go up and down. And the Fed is very well aware of that. That's why they track core inflation after all. So I think we could see a little bit of impact on core prices, but they're very easily identifiable. The Fed is particularly interested in core inflation in super core, so things that exclude volatile components, and wage inflation is what really matters. And we're going to get another report this Friday, and we are expecting deceleration in the pace of wage gains. So like average hourly earnings will likely decline, growth in year-over-year pace will decline in the upcoming report.
So sort of, again, emphasizing this idea of maybe a soft landing, or that the Fed has achieved what it set out to achieve. Yeah, Yelena, so many economists like yourself, or just in general sort of market pundits, were skeptical that the Fed could achieve this, in part because historically they have not. So it was a reasonable assumption. What do you think was the sort of X factor here?
Well, yeah. So historically, it's very rare, and that's why the Fed chair has been so cautious, calling a victory here. But I think it's quite possible, and supply side factors could help us uh, really achieve that. So we have seen quite significant growth in immigration in the last couple of years. We could still see that following this year. So we may still have some growth without an increase in unemployment rate, at least this year. Who knows what happens in 2025? It's the outcome is quite binary there. But I would say that there's a very good chance that this year we will see a little bit more of the same, even though growth could decelerate to a more normal level as rebalancing in the labor market continues.
Yes, we shall see. Yelena, thank you so much.